Hi, my name is Fatima Iqbal. I'm with Azzad Asset Management, and today I'm here with Ihab Salib, the lead portfolio manager for the Azzad Capital Fund. We're at Federated Investment Management in Pittsburgh, Pennsylvania to talk about the Azzad Capital Fund. So Ihab, thanks for having us today.
Thank you.
To get us started, can you give us a little bit of an idea about how the global markets performed in the fourth quarter of 2014?
Sure. It was a rocky quarter. We had a lot of things going on. You had energy prices and oil prices going down. So anything that's related to that complex was obviously seeing a lot of volatility. You had the Russian tension increasing, so that's also caused a lot of volatility. And on top of that, you had issues within Europe, whether it's related to the upcoming Greek elections or deflation in Europe. So all of that combined, I would say, started the quarter off pretty well. So we had good returns in October, and as the quarter went on into November, December, it got a little bit more volatile.
More rocky. Then can you tell us a little bit about how it was here in the U.S.?
U.S. didn't skip a beat out of most of it. So you had GDP growing at about 5% annualized rate.
Okay. In
the fourth quarter. You had good employment numbers, good manufacturing numbers, so pretty strong across the board. You also didn't really see too much out of the Fed. The Fed's meeting at the end of the quarter, they tended to say, yes, we're stopping our quantitative easing, but don't worry, no interest rate rises imminently. So that kind of pacified the market a little bit, and risk assets got a little bit more of a bid and attractiveness to them.
So for the Azzad Capital Fund, in this quarter, what did you say helped performance?
We had a really good quarter and a good year, actually. So we ended up the year up 2.8%.
Okay.
And the quarter, I think we're up a little bit over 0.5%, about 50 basis points approximately. Pretty much everything worked as it should have in a volatile quarter like this. So we had a component, outside of cash, we had a component in time deposits, and those did what they're supposed to do. Lower volatility, give you a reasonable return, around 1% or so. You had some small equity exposure, which performed like the market or maybe slightly better, so that also gave you a little bit of good return. And the largest part of the portfolio, the Sukuk portfolio, also performed much better than the overall fixed income market.
Okay. And would you say there's anything that hurt the performance for the fund?
If I want to do like bond by bond, I would say some of the countries, some of the Sukuk bonds that benefit from lower energy prices, like Indonesia, for example, those were up significantly.
Okay.
South Africa, Sukuk was up significantly as well. Some of the sovereign Sukuk, again, that benefit from lower oil prices.
Okay.
On the margin, some of the bonds in the Dubai complex were down maybe 10, 15, 20 basis points at the most for the quarter.
Okay.
And that's not really, I don't think, from any kind of fundamental changes. It's more of people made a lot of money throughout the year being in those bonds, and you had a little bit of profit taking towards the end of the year.
Okay, fair enough. Well, thank you very much, Ihab, for sitting down to talk with us today. Please watch this video and others like it on our YouTube channel. For Azzad Asset Management, I'm Fatima Iqbal. Thank you for watching.